Hey traders, it's John Fortune here with this week's weekly Forex forecast. I hope you're having a fantastic weekend. In last week's video, I highlighted the dollar pairs as the best place to make money in last week's trading, and all of the pairs highlighted in gold, which have now closed for the week, closed successfully, and the best opportunity was highlighted as pound dollar to the downside, and that closed down over 2% last week. Bitcoin was also highlighted in last week's video, but it has yet to close the week. It closes tomorrow, and I still think Bitcoin is on track to close successfully this week as well. Okay, so a quick look at the economic calendar, because there are some very important pieces of data coming up, and there were some important pieces of data last week. Very quickly from last week, the ISM data and also the non-farm payrolls data came out better than expected, and this is being seen as giving the Fed more room to continue with their aggressive rate hiking and increasing the probabilities of a 75 basis points hike from the Fed this month, in this month's meeting. Okay, so jumping ahead to this week, we do have a bank holiday out of the US on Monday, so I expect that the markets will pretty much do nothing on Monday. But once we come into Tuesday, we have an interest rate decision out of Australia. And when we look at the Aussie pairs today, just bear in mind that this is the case and that the market is likely to do nothing. I'm talking about the Australian dollar pairs on Monday and lean into this interest rate decision on Tuesday. And then they're likely to start to move from Tuesday onwards. Anytime, because we also have a Canadian interest rate decision this week as well. So anytime you decide to trade an interest rate decision before the interest rate decision takes place, it's going to entail more risk. It's going to be more risky than if you wait until afterwards. So it's entirely your choice how you wish to trade them, but just bear in mind one carries more risk than the other. I prefer generally, unless I have a very high conviction, to trade after the interest rate decisions themselves. And beforehand, those markets tend to do nothing. So Monday, Tuesday, Wednesday, don't be surprised to see the Canadian pairs go nowhere and then start to move from Wednesday onwards. We will be looking at both the Aussie and the CAD pairs in today's video. And the big one next week really is the interest rate decision out of the EU. They are expected to raise rates by 75 basis points. And to me, this actually started out once we had, if you remember back, we had good economic data essentially, or it's not great economic data, but better than expected economic data coming out of the US. This allowed the Federal Reserve to be more hawkish. This had traders investing or piling into the dollar, which put downward pressure on the euro. And it started out that the ECB came out basically, in my opinion, almost to jawbone the euro a bit higher by saying, look, we're considering a 75 basis points hike at the next meeting. And now the markets have actually priced that in. So whether they were jawboning to begin with and they've boxed themselves into a corner here, or perhaps because of the inflation data which has been coming out, they really do feel the need to go 75 basis points. Either way, the market is now expecting the ECB on Thursday to raise by 75 basis points. Now, the problem with this is that EU inflation and US inflation are not the same thing. When you look at it, there is more demand-driven inflation in the US, which can be better addressed by raising rates, tightening financial conditions, whereas in the EU, there is much more inflation on the supply side, which is not going to be helped by raising interest rates. So the problem the EU has is if they raise rates too aggressively, they run the risk of really not doing much on the inflation side because it's coming primarily from energy prices, which have been driven up by the Ukraine war. And at the same time, if their unemployment and growth outlook starts to deteriorate very quickly because they're hiking rates aggressively, then they're not only going to have high inflation, but they run the risk of having to cut rates again much earlier because of damage done to growth and employment. So I don't think the ECB, personally speaking, just my opinion, I don't think they really wanted to go 75 basis points. I think they started out just trying to put some support under the euro as the recent economic data out of the US was better than expected and therefore bullish for the dollar. And on top of that, the other problem that the ECB faces is at the end of last week, going into this meeting, which of course I don't think in any way is a coincidence, the Russian government turned off, already Gazprom, but an arm of the Russian government turned off the Nord Stream 1 pipeline. So now there are no gas flows going into Germany, which is going to again exacerbate the inflation problem that the EU faces. And on top of that, they've closed it down indefinitely, so they haven't yet said exactly when it's going to reopen. So all of this is actually going to put pressure on the ECB next week to actually come out with a less severe rate hike and perhaps go 50 basis points. And so if they do this and the market is pricing in 75 basis points, just bear in mind the risk is to the downside for the euro asymmetrically, in my opinion, because there is no way that the ECB is going to come out, in my mind, with a 100 basis points rate hike and surprise to the upside, because this is going to cause all kinds of problems. So the far greater risk next week, I mean, look, anything can happen. You know, there is probably a very, very, very small odds somewhere of them coming out with 1% rate hike, but I think it's probably close to zero. But far more likely in terms of probabilities is that they come out with a 50 basis point rate hike because of the concerns over not just growth and spreads, but also now Nord Stream 1. And if that's the case, you are going to see a very strong bullish catalyst for the dollar, and you're going to see the euro selling off pretty hard. If they come out and they raise by 75 basis points, then all they're really doing is what the market's already priced in, and you can still see the euro rolling over on that. So in my opinion, this is the event which is going to dominate the markets next week, not just the euro, but also likely the dollar. And I do think the bigger risk here is for an unexpected 50 basis points, and therefore the biggest risk is for the euro to the downside, the dollar to the upside. Okay, so let's have a look at the scorecards coming into this week. And the first thing to note is that the pound still has its foot flat to the floor here at -4. So the pound really is the top play, in my opinion, heading into next week. And in fact, last week it was the best performer. Even outside of pound dollar, which did well, the pound sold off against virtually every other currency. And even the Swiss franc pairs we looked at last week, but highlighted as not some of the best opportunities, but just opportunities, it was the pound that underperformed the franc pairs as opposed to the New Zealand and the euro. So pound weakness is still absolutely a number one priority heading into next week, and it is my favorite play. After that, it is long dollar. So again, pound dollar specifically to the downside is absolutely something I'm going to be paying attention to. And aside from that, you can see the other signals you could say here are for the Canadian dollar, which has a score now of 2 and has increased its score, its positive score from +1 to 2. And on the other side is the Japanese yen, which has a score of -2, decreasing its score from -1 last week. And as I've always said in these videos, those are the best signs usually of setups heading into next week, when you have positive currencies becoming more positive and negative currencies becoming more negative. Now, something to reiterate, because often this gets lost in the interest rate decision weeks, is that the interest rate decisions themselves have the ability to reverse trends, to reverse markets. And this is why I often say, if you want to be on the safe side, look for the opportunities that you see here in the scorecards once the interest rate decisions themselves take place, because that's when you will have the least risky setups in the markets which have interest rate decisions that week. So to summarize here, I'm going to be looking at pound dollar to the downside once again, going to be looking at US dollar yen to the upside this week, also going to be looking at pound CAD to the downside, and also CAD yen to the upside. They are going to be preferably interest rate decision trades from Wednesday onwards, because those pairs are likely to do nothing into Wednesday and then move from Wednesday onwards. So if we get a bullish reaction from the Canadian dollar from Wednesday onwards, that's your sign to start to look at CAD yen to the upside and also pound CAD to the downside. And the same with the Australian dollar here. If we get a bullish reaction from the Australian dollar on the interest rate decision on Tuesday, that's going to be your opportunity to then go and have a look at Aussie yen to the upside for the rest of the week, pound Aussie to the downside for the rest of the week. Okay, so let's have a look at the individual currencies before moving on to the markets themselves, starting with the DXY. The whole way through this, I was telling you guys this is most likely a correction, and we are headed for new highs and into the 109.76. We did take out the 109.76 last week, and that was a fantastic move. In fact, that was pretty much, in Forex terms, your August right there from the roughly 105 into the 109.76. Coming into this week, the DXY is still the only currency in an overall bull market, and it's really benefiting from the weakness of the Japanese yen, because any risk-off sentiment is flowing into the dollar as opposed to the yen because of the ongoing situation with the bond market in Japan. and the devaluation of the yen. So any pullback in this market is simply viewed as another opportunity to look for bullish reversals into the 111.30. Next is the euro. In the euro, we did break down and retested the major 7-year breakout level of the 1.0375. We are now consolidating. We've pretty much gone nowhere. 1, 2, 3, 4, 5, 6, 7, 8 for a couple of weeks here. And so any continued correction or pullback is still only viewed as an opportunity to look for further declines in the euro into the 0.9780. Next is the pound. Now, I'm showing you this on a weekly chart instead of the daily chart because I want to show you where we are in the pound. We're approaching the next targets at the 1.1450, but this is not a level of significant support in any sense. This is actually it's the start of a major breakout to the downside in the pound. I mean, where do we go from here? I posted a while ago that I believed the pound was heading to parity. I do still believe that we are heading down towards parity in the pound. I'm not saying it's going to happen next week, but a break below the 1.1450 in the pound is the start of the next major leg down. It's not the end, it's not the bottom, it's the start of the next major leg down in the pound. So keep an eye out for a break of the 1.1450 next week, because if we can break down below the 1.1450 with momentum, and you see all of these buyers who have been underwater, if they bought down here, if they bought up here, they've already been stopped out. All of these buyers, or the last buyer here, is likely to capitulate once we take out these lows. And this does spell some real trouble for the pound. And again, if we're only just starting to break out to the downside in the pound, what does that tell you about the DXY, which, of course, the pound makes up a part of the dollar index? So huge breakout to the downside potentially next week at the 1.1450. I absolutely, under no circumstances, would want to be long the pound, and it is my favorite short. Next is the Swiss franc. Now, I believe there was actually a target down here last week, and we came and achieved the target in the Swiss franc. However, I think I took this off accidentally. I'm not 100% sure, but I'm about 95% sure we took out the target here and I've accidentally removed it. But either way, the Swiss franc is selling off to the downside. And last week, the reason I didn't put the Swiss franc pairs in gold, even though they had a score of +2, was because they came off of an overbought level for the first time. And when you start to see markets coming off overbought or oversold in the scorecards, they tend to continue all the way down, usually to the other side of the scorecards. And this is what we've seen in the Swiss franc. And going into this week, this is why I'm not really interested in the Swiss franc. And you can see it's actually, yes, it's currently bearish, we're selling off, but it's overall fairly neutral, especially relative to other currencies like the euro or the pound. So I think patience is required on the Swiss franc pairs. They're not a fantastic short, relatively speaking, because they are still positive in the scorecards, but at the same time, they're not a great buy. I think we could continue down here in the Swiss franc. So Swiss franc pairs off the table for me for the time being. Next is the Japanese yen. The major breakout was below the 0.007945, and we haven't even really looked back here. We took out the target to the downside last week at 0.00722120. Going into this week, I am looking for further declines, and any pullback is viewed as an opportunity to look for shorts in the yen once again into the 0.00702660. Next is the CAD. The CAD is not particularly bullish when we look at it technically, but it is the second best scoring currency on a 1 month forward looking basis. I really would only like to trade the CAD pairs next week, say CAD yen, pound CAD, which I highlight here as two of the best. But remember, we have the interest rate decision out of CAD on Wednesday. So what I would like to see probably, if we could come down and kind of double bottom here and then reverse higher on Wednesday, that would probably be the best setup to start to look for CAD yen to the upside and pound CAD to the downside. Even if, don't forget, even if the Canadian dollar just chops around and does nothing, it will still rise vis-a-vis the pound and the yen if it moves sideways and the yen sells off or the pound sells off. You will still see CAD yen moving to the upside, and you'll still see pound CAD moving to the downside if the CAD really goes nowhere and the other two remain very, very weak. So I do like the CAD pairs relatively next week, but again, it's the dollar pairs which are the number one setups currently. Australian dollar, I did highlight the head and shoulders breakout. This is the start of a new trend down, and I do expect to come down to 0.66890 and make a new lower low in this overall trend to the downside that we have. And finally, the New Zealand dollar, also bearish, but again, not really as bearish currently as I am with the pound, with the euro, or even with the Japanese yen. Any continued pullback is simply viewed as an opportunity to look for declines into the 0.600 level. Okay, so let's have a look at the market, starting with crude oil. Crude oil does look like a good opportunity going into next week. In fact, it's one of my favorite, I haven't marked it in gold, but it's one of my favorite setups heading into next week outside of these pairs here. Why? Because I do think we are going to come down to the 84.49. You could probably put this in gold. Any pullback in WTI crude oil next week is going to be viewed as an opportunity to look for bearish setups into the 84.49. In a week where the Forex pairs might be a little bit choppy because of all the interest rate decisions, crude oil, I think, could be one of the best places to look for opportunity next week. Next is pound dollar. We smashed through the target last week at the 1.17150. We're heading down towards target 2 from last week at the 1.1411. Heading into this week, pound dollar is my favorite short once again. This was my favorite short last week. Any pullback in this market is simply viewed as another opportunity to look for bearish reversals down to the 1.1411. As I just showed you, the 1.1411 is the major low, and if we break through here, there's nothing but air down to the 1.0886. So pound dollar is really going to be my favorite short heading into next week in terms of the Forex complex, and I think the pound actually is in quite a bit of trouble. Next is US dollar yen. We took out a previous target to the 140.29. We didn't look at this last week, but that was a target from previous videos when we did look at it. Any correction in this market is viewed as an opportunity to look for bullish setups. And when I say this, I know sometimes people like to say, look for a pullback to here, look for a correction into this area. But the markets can correct sideways, they can correct deep. You can never predict in advance how a market is going to correct. You don't need to predict those things, you just need to react to them. Wait for the market to correct. However the market corrects, that's your opportunity to then look for a bullish breakout, and that gives you your opportunity to start to look for longs into the 142.19. Next is euro dollar. Just bear in mind with all of the dollar pairs that interest rate decision on Thursday out of the ECB can have an effect on the dollar pairs, but certainly euro dollar. I would be looking for a correction. What I'd really like to see is a correction in euro dollar, perhaps even into the interest rate decision, and that would be the opportunity then to look for bearish setups, especially if we break down on the interest rate decision like this. Any momentum to the downside after a correction into the ECB meeting, that's going to be a great opportunity to look for shorts once again into the 0.9860. And the final dollar pair is New Zealand dollar. We've started to pull back towards the end of the week anyway, so any correction like this, look for a breakout to the downside, and that's the opportunity to start to look for shorts in New Zealand dollar into the 0.6015. So those are my 4 favorite dollar pairs heading into next week. Just bear in mind, especially with euro dollar, but potentially all of them, that ECB meeting on Thursday. It may dominate the euro and the dollar next week. Next is CAD yen. Just bear in mind as well, with the CAD pairs, we do have the Canadian interest rate decision on Wednesday. So what I would like to see in this pair is any pullback and a correction. I'd like to see this market pull back like this into Wednesday. And then on Wednesday, when we have the interest rate decision, if we get some momentum to the upside, that's the opportunity to start to look for long positions into the 107.64. And just remember, the objective here is not to trade every single one of these markets. It's to find the opportunities in these markets. You only need to trade one good market each week to make money. Next is pound CAD. Now this market really should be on the top because pound CAD I prefer over CAD yen because the pound is weaker than the yen. So any pullback, you can see we've broken out of this consolidation over here. Any pullback towards this area is going to be viewed next week as an opportunity to look for bearish reversals down to the next key area of support of the 1.5002. And the final market here, not highlighted in gold, it's not one of my favorite, but pound franc did underperform last week, even though the Swiss franc wasn't particularly strong. It was quite weak itself. So heading into this week, if you are looking to trade Swiss franc pairs, I would absolutely only be looking at pound franc. We've started to break out, so any pullback in this market, and the good thing with this market is, although it's not as good in the scorecards, it does allow you to sidestep some of those interest rate decisions. Any pullback in this market is going to be used as an opportunity to look for shorts into the 1.1119. So worth having pound franc in there purely because of the amount of interest rate decision affected pairs we have next week. Next is pound Aussie. We took out the target at the 1.69180. We do have the interest rate decision on the Aussie pairs here, the final Aussie pairs, don't forget, on Tuesday. What I would like to see is if this market does nothing and then we start to break lower like this from Tuesday's interest rate decision because we get a bullish Australian dollar reaction from it. That would be your opportunity Wednesday, Thursday to look for a pullback, and that would be the opportunity to look for shorts into the 1.6885. So pound Aussie and Aussie yen I will be looking to trade only after the Australian interest rate decision on Tuesday. So wrapping up the Aussie pairs with Aussie yen. Again, any correction, I'd like to see the market correct first. I'm not going to be looking to trade this on Monday. So if it corrects on Monday and then we get the break like this on Tuesday morning, that's your sign to start to look for potential long setups into the 96.99. Okay, so wrapping up the video with gold, silver, and Bitcoin. And the first thing here, which is very, very important going into next week, because we have an interest rate decision which affects the euro, the dollar, the CAD, and also the Aussie pairs, if you want to try and sidestep that event risk as much as possible, crude oil to the downside, gold to the downside, and especially silver to the downside and Bitcoin to the downside are probably your top 4 pairs to do that, because those markets are not only good setups heading into next week, in my opinion, but they are the least affected by all of the interest rate decision volatility next week. So just bear that in mind, because we have a lot of interest rate decisions next week. If you want to skip or sidestep a lot of that event risk, I would be looking at crude oil, silver, and Bitcoin to the downside, and then after that also gold to the downside. Okay, so starting with the gold-silver ratio, we did take out the 95 level, and this has led to an outperformance of gold over silver, or you could say an underperformance of silver relative to gold, which is exactly what I've been highlighting in recent videos. If you had been short silver, as we have been in the weekly Forex Forecast, and I've personally been trading, you would have done much better recently than if you'd been shorting gold. I still believe this is the case heading into next week, and I'm looking for the 96-93 next in the silver-gold ratio. Next is gold. We are coming down to the target of the 1676.87, and we did bounce, and we're putting now in here a bear flag. So any continued correction, and again, perhaps you don't want to trade next week because of all the interest rate decisions, that's fine. Oil, gold, silver, Bitcoin, keep an eye on those for next week. Any pullback, continued pullback in gold is simply viewed as another opportunity to look for shorts into the 1676.87. Next is silver. Silver was a great short last week, and we came all the way down into the target at 17.63, almost to the pip. That was a fantastic move in silver. We have started to correct, but as it currently stands, this is simply viewed as a correction, and any continued pullback, the deeper the better, because it gives us better risk to reward to the target. Any continued pullback is simply viewed as another opportunity to look for shorts into the 1696. And last but not least is Bitcoin. I've been bearish on Bitcoin for a while, in fact all the way down really, and this has been a fantastic market to trade to the short side. What we're looking at here is simply a consolidation. This is a pause before most likely the next move down, and I am still looking for shorts in Bitcoin. This was the only market highlighted in gold last week which didn't close to the downside negatively or successfully in the direction we were looking for, and that's the only reason for that is because the market hasn't actually closed yet. I do still think we could come down today or even tomorrow in Bitcoin because it trades over the weekend. So any continued pullback in Bitcoin is viewed as the opportunity to start to look for shorts once again. You can look first of all for a conservative target down here at the 17,567.45, which is the major previous low in Bitcoin. But overall, I am looking for the next key of support to the downside at the 16,492. So Bitcoin didn't really go anywhere last week, but I am still bearish, and don't be surprised to see this close successfully to the downside by the end of Sunday. So that is it for me for this week, guys. I haven't added in the stock indices this week. If you are interested to know what I think, go and have a look at the previous videos last week and the week before. I am still bearish on stocks, and I'm looking for new lows in US stock markets. Maybe we get a bit of a correction next week, but I am looking for further declines over this month in stock markets. So as always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.